we're still looking at May, June 2017. It's a 12-minute question, so it's not a very long question.
Yeah.
And they've given you a total of 3 questions here. Well, 3 sub-questions under question 4. And they say the questions are not related. If they're not related, keep the information separate. They do say you have to show all your calculations.
Yes.
Right, so there's the first question, A. Calculate the total amount of dividends declared and paid by Wellbeing Limited for 31st of March. Okay, as soon as I see that, I know I'm going to have to draw up a timeline of dates because I need to know what actually happened. Do you agree?
Yes.
Okay, that's the right exam technique. And this is for 4 marks. So this is what we're going to do. Let's go to our answer sheets. Let's write down question 4. Let's write down A. Okay, we're going to start with timeline. Timeline is so important for questions like this because you look at issuing shares. Okay, I'm actually going to shrink this a bit so we can see the question as well. At least then I've still got it up. It's a short question, so that helps a bit. Right, so the first bit, A. Wellbeing Limited is a medical aid company. It was registered on 1st April 2014. Is that an important date? Yes.
Yes.
That's the start. 1 April 2014. The company has an authorized share capital. Okay, what's the difference between authorized share capital and issued share capital? Do you remember the theory?
No, authorized. Isn't that what the company is allowed to sell?
Correct. There you go, you do remember it.
Yeah.
And issued is what they've actually
issued.
sold.
What they've actually sold.
Issued, exactly. Correct. Good. Okay, so they can sell 1 million ordinary, and they can sell 500,000 pref.
Yeah.
Preference. Right, so that's what I've written there. That's authorized when you start the business. The authorized share capital, the preference share is 8%. That's important, 8%, because why? Relates to the dividends, and that's what the question is asking you about. Okay, so the 8% is very important to pull out in the question, the initial bits.
Yeah.
The company offered 400 of its authorized shares to the incorporated the company. All of these amounts were taken up and paid for on 31st of April.
Yes.
Okay, so this was applied for, and this did take place, so 30th of April 2014. Okay, how many ordinary shares? So where was it? 400,000 ordinary. Makes sense?
Yes. Yes, it does.
Drawing a diagram. All of these shares were taken up and paid for on 31st of April. Okay, we read that. On 20 June, Wellbeing also issued 175 of its preference. So now we need another date. 20 June 2014. Okay, 175 pref.
Yes.
To the value of 175. So we need to put that. Rand value 175. Okay, to the public. The preference shares were fully subscribed and 31st June, and the pref dividends were paid accordingly to the preference shareholders on 31st of March. Okay, so March is the end of the year. 2015. Right, do you see that?
Yes.
Okay, start. End. Does that make sense?
Yes.
Okay, great. Let's go back to the question. On 1 September 2015, 1 September 2015 is outside the financial year, so that'll be the next year. Okay, so 1 September 2015 Okay, what happened here? Offered 30% of its ordinary share capital. So 30% of 1 million. Do you agree? Because ordinary shares, there are 100 million authorized.
Yes.
Okay, so 30%, 0.3 of a million is 300,000 ordinary shares.
Yes. Yes.
Okay, did they authorize anything else? And 50%. And 50% of its authorized share capital to the public. Okay, this was worth 300,000 rand. Okay, and then also how much? Also issued pref shares how many pref shares? 50%. How much pref shares do we have? 250,000, right? Because it's 500, half of 500 is 250. Okay, that's what they said. 50% of its authorized preference shares at 275 respectively.
Yes.
275,000 respectively. That's the value.
Yeah.
Got that?
Yes, I do.
Okay, let's keep reading. What else do we have here? Considered to be the market value. Okay. Future Save Bank appointed the underwriter to the issue. Okay, so that's commission. By the closing date, 16 September, only 280 ordinary and 260 pref shares applications had been received. The shares were allotted on 30th of September, on 31st March 2016, while being declared a dividend to the ordinary shareholders. Okay, there we go. There's the date. Okay, so we need 31st March 2016. 31st March 2016. It's quite a long timeline. We've also got that other date here, which is the underwriting. Let me just write that underwriting date. Oh, well, 15 September to 16 September. That's the underwriting. Okay, that's what we've got in the question. Okay, then the last date is the 31st of March 2016. Here they said you declared and paid a dividend. Do you agree?
Yeah.
Right, and then we've got ordinary and then we've got preference. Okay, dividend payments were made on the 2nd of January. Remember, all they said was this. How much dividends was declared, how much dividend was paid. That's what they want for 4 marks.
Yeah.
Okay, so now I've drawn everything on the diagram. Right, what do I need to know? I need to know how much ordinary at the end of the year, well, 31st March. Okay, we've got 2 years here actually. Okay, start and end. Right, so in order to work out dividends, all you need to do is work out how much ordinary and how much preference did you have at the end. That's all. Okay,
yes.
So ordinary shares. How many shares have I issued at the end of the year? Well, let's go back and look. There's ordinary that I've issued, 400,000, and there were more here. There's 300 I've issued. Do you agree?
Yes, I
okay,
do.
So how much have you issued at the end of the year? 700,000.
Yeah.
400 plus 300.
300, 700.
700,000 shares, brackets ordinary, issued to date. Does that make sense?
Yes. Yes, it does.
That's part of my working. Right, what was the dividend? Let's go back to the question. Declared a dividend of 15 cents per share to ordinary shareholders. Do you see that?
Yes.
Okay, so times that by 15 cents equals 105 Rand. There's your dividend. Dividend declared and eventually paid. Does that make sense?
Yes, it does.
Okay, that's for ordinary. There's your first amount. Right, then we need the pref shares. Okay, so same thing applies, except now I'm looking at preference shares. Okay, so how much pref shares have I issued? Well, here's issued pref shares. There's one. And there's more issued pref shares. Here's some more. Do you agree?
Yes.
Right, remember pref shares, dividends, just to revise, see, this is revision. Dividends are paid according to its nominal value or Rand value.
Yeah.
Okay, so total value of the pref shares. Okay, bracket split according to date. Right, so this pref shares, did I hold this amount, this 175,000 Rand worth of pref shares? Did I hold that for the full year, the green year?
Yes.
Yes, you did. So 175,000, okay, for the full year at 8% interest or dividends.
Yeah.
Okay, so let's work that out. 175 times 8% gives me 14,000. Preference dividends. Okay, did I hold these pref shares for the full year?
Yes.
No, I didn't. These pref shares, the ones I issued during this year.
Oh, no, that was hold for just a portion of the year.
Only a portion of the year, exactly. Let's highlight that. How long did we hold that for? We need to go back and check. Where was it? 50% of the preference share capital to the public, respectively, considering the market value. Future Bank was appointed to underwrite. When did the shares actually get issued? There, by closing date. By closing date 16 September, only 280,000 ordinary, and that was preference shares applications had been received. The shares had been allotted. There's the key date. 31st September. Alright, so the start share is 31st of September 2014. Was it 14 or 15? It was 15.
15.
Right, so from that point, 30 September to 31st March is how long? Do I count September? No. I would count October, November, December, January, February, and March. How many months is that? Six months. Okay, so from 30 September to 31st March, that's 6 months. Okay,
Yeah.
if I'm working out the dividend for 6 months, I'm going to multiply the nominal value. So what is the nominal value? 275,000 times 8% times 6 over 12.
Yeah.
Gives you an answer. 275,000 times 0.08 times 6 over 12 gives me 11,000 dividend preference share dividends. Okay, so to answer the question, calculate the total amount of dividends declared and paid by Wellbeing on 31st of March 2016. Okay, final answer. Ordinary share dividends, preference share dividends, total dividends.
Yeah.
Okay, so ordinary was what I worked out here. Where was it? There's it. Preference was what I worked out here. So this plus that. Total is this plus that. Okay, there's your final answer. 4 marks for doing that. So it's just It's just a timeline that you need to analyze, that's all. Got that?
Yeah.
Okay. That was A. Let's look at B. B says, Ice Cold is a company involved in the beverage industry. You've got an extracted accounting record. Okay, the business. You've given that. They've given you that. There's the required. Okay, the required says, calculate the return on assets and the return on equity. Okay, so what must you do when you see a question like this, Brogan?
Do you have to figure out what's assets and what's owner's equity?
What's assets and what's owner's equity? Correct,
well,
but you need the formula. Do you agree?
Yes.
Okay, so where do I get the formula? Comes from my study guide.
Okay.
I'm going to have to open up the study guide just to get those equations again. Where's the study guide? Here's the study guide. Okay, do you remember what page the formulas was on? I asked you to study a page. There was a page that you needed to study. A few pages. Okay, let's look at the contents. Analysis 144. Okay, there's it. Analysis and interpretation of financial statements. That's what you need. Do you agree? Statement of return on equity, return on assets. There we go.
Okay.
Okay, so in this paper, ROA and ROE are asked for. Okay,
yeah.
So I need those equations. Where's ROE and ROA? There's it. Okay, so those are the two formulas that you need to study. Okay, so this is something that you would have to study.
Yeah.
Take that through to my working. There's my ROE formula. There's my ROA formula. Is that okay?
Yes.
Alright, then once you've got that, then you need to answer the question. Okay, they said calculate the average, the ROA. Perfect. Right, then you're going to look at the information. There's the information for B.
Yes.
Okay, so if I'm working out ROE and ROA, ROE requires profit before tax. They give you profit before tax. Do they give you profit before tax? They give you profit before tax and interest expense. That's what they give you. Profit before interest and tax expense.
Yes.
Is how much? Profit before tax and interest expense. Okay, I need to show this separately. Profit before tax is one amount. Profit before tax is 38400. Interest is 11025. Do you see that?
Yes.
Given in the question there. Okay, so they want profit before tax, which you've been given. So ROE is easy to calculate. ROE will be 38400 divided by total equity. Do they give me equity here? Yes or no? No. How do I get owner's equity?
Yes.
Assets minus liabilities. Okay, so to get equity, I'm going to take all my assets and minus my liabilities. So 586000 plus trade receivables 36500 plus inventory of 11,000 plus bank of 8,200 minus the liabilities, mortgage of 220,500 minus trade payables of 25,000. Okay, that's going to give me owner's equity, because owner's equity needs to be calculated before you can calculate the ROE. Does that make sense? Basically, what we had to do here was we had to calculate the equity. Equity is assets minus liabilities. So I took all my assets land, receivables, inventory, bank. I added those four and I subtracted mortgage and trade payables, and that gives me the total equity.
Yes.
Okay, then if I times it by 100, I'm going to get a percentage. Right, so ROE is equal to 9.69%.
Yes.
Okay, there's it there. Do you see that?
Yes, it is.
Great. Okay, then the last bit here is just profit before interest and tax. Okay, so if it's profit before interest and tax, remember, profit before interest and tax, okay, would have to have less interest. That gives you profit before tax. Then you'd have to less tax, and then you'll get profit for the year. Okay, do you see that?
Yes, I do.
Okay, so now, obviously they gave you what in the question? They gave you profit before tax, so they gave you this figure. Did they give you interest? Yes, they did. They gave you this figure. So is it possible to get this figure? Yes. What must I do? I need to add. Right, so if I've added profit before interest and tax, I get 49,425, okay, which is what I'm going to substitute in my return on assets calculation. Okay, so return on assets equals 49,425 divided by total assets. Total assets, yeah. We had to work out profit before interest and tax. If they gave us profit before tax, I can work backwards to get the profit before interest and tax. Then the equation says, take the profit before interest and tax and divide it by total assets. How do I get total assets? I just need to divide by all the assets. So land plus receivables plus inventory plus bank. Okay, and then times that by 100 gives you an answer. Right, do you see that?
Yeah.
Okay, so ROA equals 7.7%. There's your ROA. Okay, so they actually did test the ratio question, or two actually. That's quite good. And how much marks was that for? That was for 3 marks. So 3 marks just for knowing, 3% just for knowing these two equations.
Yeah.
Right, and it was very easy to calculate. The only thing difficult about this question was getting the profit before interest and tax.
Yeah.
Okay, right, we've got one more in this paper and then we wrapped it up. C. Okay, so there's C. The following information relates to the head office and branch. Okay, this is a branch question.
Yes.
Required. Prepare the branch inventory account properly balanced off and closed off in the general ledger. Okay, 3 marks, simple, easy, nice question. Okay, so what must I do? I need to draw up a T account.
Yes.
Branch inventory. Okay, branch inventory, you know, is like any other inventory account. It's an asset. Okay, then they tell you transactions extracted for the year ended 31st March were as follows. Inventory to branch at selling price. Okay, so they've given the head office has given the branch stock. So is the branch's stock going to go up or down?
Up.
It's going to go up, correct. So 31st of March, inventory to branch. Okay, remember this is at selling price. I'm just going to put a note here at selling price. Okay, so you should show this separately. You should split it for cost price and markup.
Yeah.
Okay, that's probably how they're going to want you to show it. I'm going to show it separately. Okay, so I've got the selling price. What is the markup here? Okay, there's the markup. Inventory supplied to the branch by head office at a markup of 30% on sales. Do you agree?
Yes.
Okay, so if it's 30% on sales, cost price markup selling. Okay, markup is 30% on sales, so 30 over 100. So cost price would be 70. There's your ratio. Okay, so I need to work out the cost price of the inventory. Okay, so cost price would be the inventory to branch it's selling. So 56250 times it by 70 divided by 100. Okay, it gives you that amount. The markup is going to be 56250 times 30 divided by 100. Okay, it gives you that. If you add those two amounts together, you're going to get 5625. Right, so I've split it in terms of markup and cost. There's the first line item. Is that right?
Yes, it is.
Okay, cash sales. What does cash sales do to the branch inventory? Increase or decrease?
Increase.
Decrease. If you sell stock, stock goes out of business.
Yeah, decreases.
Okay, so cash sales would have been bank. These are cash sales for the branch. And then you had credit sales, which were the branch debtors. Okay, so bank was how much? Here's it, cash sales. 3333750, and branch debtors was 20250. There's it, branch debtors. Right, so now I've recorded that bit in the actual books of the business. All I need to record is the ending bit. Okay, so the last bit says inventory balances at selling price. Okay, so that means balances at the end of the year. So balance. Oh, I forgot to put the balances in. I need to move this down. Okay, move it one line down or two lines down. Okay, we need to balance this off. Okay, I forgot to put an opening balance here, which we've got. There's the opening balance. They gave it to you at the end of the question instead of the beginning. See that?
Yeah.
Okay, opening balance at the beginning. Alright, so the opening balance will have been balance brought down. Okay, we're going to show 3500 there. Okay, balance at the end was how much? 55. Okay, and then we'll obviously carry that balance down. Okay, then we need to balance this off. So which side's bigger? Let's sum up the left and the right. Sum up the left, I get that. Sum up the right, I get that. Which side's bigger?
The left.
The left is slightly bigger. Okay,
yeah.
So then you'd have this. Okay, and then you'll have a balancing figure here, and it'll be for the branch adjustments. Balancing figure. Okay, and the balancing figure would be this total subtract the sum of all of that.
Yes.
No, all of this side.
Okay.
How much was it? 250. Oh, come on. Let's do it again. Sum up the left, sum up the right. Left is that. Right is this. Which side's bigger? That side's bigger. So
yeah.
I want that side on both sides. Okay, so this minus this minus this minus that gives me, oh come on, equals this minus that minus that gives me 250. There we go. Okay, that was C. That's what they asked for. 3 marks for that. Okay, it wasn't a difficult question.
No, it wasn't.
No, it was just more math than anything.
Yeah.
At least now we've completed the 2017 paper number 2. Is that alright?
Yes.
Okay, so I know you haven't had a chance to redo that paper that you wrote last semester, which is paper number 1. So what I'm going to do now is I'm going to go through the paper. We won't cover all of it. We'll do maybe 1 or 2 questions, and we'll see how would you approach it. Okay, because remember, you would have done that paper before, so you would have remembered maybe a bit of what the paper looked like, and then we can see, well, this is how we should have approached it. Okay, what I'm going to do with that paper is I'm going to focus on passing the actual exam. Okay, because remember, we've now looked at one of the 2017 papers. So these papers were actually very similar. The other one just asked for the other questions.
Yeah.
Alright, so what I'm going to do is I'm going to show you what I would do to make sure that you pass the actual paper. So the first step is always to pass, and to pass we need to get all the easy marks. That's the key. Right, and easy marks are quite easy to get so long as we know what to look for.
Yeah.